Good afternoon, everyone. First, I'd like to congratulate London Business School and the African Club for hosting such an impactful event, drawing attention to the exciting opportunities in Africa. My name is Jingdong Hua. I'm treasurer of the International Finance Corporation, a sister organization of the World Bank. We are fortunate to be the only international development finance institution that focuses on supporting the private sector, because we know that the private sector creates over 90% of jobs in any country in the world. Without a vibrant private sector, it is very hard for any country to achieve its full economic potential. Coincidentally, IFC was founded the year Ghana became independent. In the 61 years, we catalyzed over $1 trillion of investment in over 120 countries through more than 6,000 long-term investment projects covering financial institutions, infrastructure, manufacturing, agribusiness, tourism, and so on and so forth. Why bond market? Now, IFC has received capital injection as a form of a bank. We are AAA rated. And I think April was a critical month when you probably have heard that our shareholders in the World Bank Group decided to inject $13 billion more capital into the World Bank and IFC, $7.5 billion for the World Bank, $5.5 billion for IFC, that prepares us well to scale up IFC's intervention. Sub-Saharan Africa, Africa continent, is a focus for us to scale up. Indeed, in the past 15 years, IFC's investment in Sub-Saharan Africa grew from less than $200 million a year to over $3 billion. And our plan with this new capital increase is to redouble that to over $10 billion a year in about 10 years' time. I think we can do it, and the opportunities in Africa shows that there is tremendous capacity to do it. Now, how do we raise our funds to support our investment? As a AAA-rated international issuer, we raise capital from international bond market, and I had a page where we opened London Stock Exchange market when we issued a global innovating bond in the London market. And therefore, London as the international capital center is very critical for IFC's capability to raise financing for investment. Now, this is a bond certificate from over 100 years ago from the United States, because somehow from an agriculture country over 250 years ago, the United States became the most dynamic economic power in the world, and converting a subsistent farming country to a capital market-centric country. Why? Because you need free entrepreneurship, but you need, at the same time, Wall Street in tandem, providing finance as ready. And that's how the US developed. And this is a bond certificate over 100 years ago when the United States started to build its infrastructure. Now, the year when I left China in 1990, if somebody asked me, what is a bond? I would say, I know, James Bond, because that's the only bond I knew. China, through its planned economy, never had any capital market. But how wrong I was. Because in 1911, the imperial government of China actually issued a bond to finance the first railway in China. But since the communists took over, we converted into a planned economy. What happened? Why capital market is important? I just want to quickly review the big lessons of the Asian financial crisis. As you know, Asia was growing in leaps and bounds in the 1980s and early 1990s. The four tigers, the Korean, and then India and China. But then, in 1997, most Asian countries suffered a devastating damage through the Asian financial crisis, many Asian currencies dropped against the dollar. Because Asia relied on US dollar borrowing for its private sector and government financing, many companies went bankrupt. Many governments went into very, very challenging situations. But Asian countries said, never again. We must build a deep, liquid, open, integrated domestic and regional capital market denominated in our own currency to build economic resilience, build up a savings industry through a transparent, liquid capital market, allocate proper risk return to our investment. Here is a chart that really tells the story. If you look at South Korea, before 1997, corporate bond was 0% of GDP. Fast forward to 2017, South Korea has a corporate bond market that is 74% of GDP. You take Malaysia, which had a capital market, but in 2017, their corporate bond market is 45% of GDP. Virtually means over $100 billion was raised from savings to productive private sector investment denominated in its local currency through capital market. China, where the only bond I knew was James Bond, now has a $2 trillion corporate bond market. And therefore, the new bullet trains of China were also financed by corporate bonds issued through the capital market. Why that is relevant for Africa? We should agree that, first of all, a country would never achieve its economic potential without a vibrant private sector. We would all agree with that, yeah? And the second is that private sector would never achieve its potential without unimpeded access to finance. And that could only be achieved by having a vibrant, deep, liquid, open, integrated capital market. Unfortunately, in Sub-Saharan Africa, the only market that is with substantial market capitalization is Johannesburg. In Kenya, in Nigeria, for example, corporate bond market is only 1 or 2% of GDP. Just imagine in Nigeria, a country with a GDP of $400 billion. If corporate bond market is 10% of GDP, then you have tens of billions. If it is 50% of GDP, then it's hundreds of billions. Because you denominate your bond or your capital market instruments in local currency, you also build resilience. Because as a treasurer of IFC, I like my clients to focus on growing their business rather than worrying about foreign exchange volatility. And you know, because of the ending of the global commodity cycle, many African currencies' value dropped. So therefore, developing local capital market is not a luxury. It is a necessity. And I'm very proud that IFC has been a pioneer in many of the markets as the first AAA issuer, as a credible international bond issuer. When we issue in local currency, we draw attention to the fact that that market is ready to welcome international issuers and to welcome international investors. I just want to show you very quickly. And these are the pioneer bonds in local currency we have issued over the last 10 years, including the first ever Niger bond we issued in Nigeria in 2014, and many more to come. Indeed, we cannot claim that IFC is still a predominantly a dollar house. If you look at our long-term local currency investment, we have grown in leaps and bounds, and 2018 is a historic year. We haven't finished the fiscal year, which ends on June 30th, but already our long-term local debt financing, about 1/3 is in local currency. And the trend is continuing. I think in 5 years' time, it will be over 50%. And this is very, very exciting. And we talk about the importance of building human capital. To develop a properly functioning capital market, we need government officials, we need market regulators, we need market practitioners to be knowledgeable, to know what they are doing. And there is tremendous lack of capacity in this regard. And therefore, IFC, in partnership with Milken Institute and George Washington University, offers a very unique, one-of-a-kind, 9-month executive training program to bring regulators into the classroom in George Washington University for 4.5 months of rigorous academic training with a heavy practitioner's eyes. As a matter of fact, my good friend Megan McDonald, the global head of capital market of Standard Bank, has spoken at our fellowship program to share their experiences in developing capital market in Africa. Where the other 4.5 months, we place them at investment bank, in private equity fund, in hedge fund. What do we want to do? These people will be future finance ministers, central bank governor, chairperson of security regulators. They will lead the acceleration of capital market development in Africa and beyond. At the end of the day, it is through the efficient recycling of an ever-growing domestic savings that one will have the funding needed for economic development. And this is really key. Our job is really to nurture a cadre of champions of capital market development. We're very happy we just graduated the second cohort. The third cohort, 25, will come on board in August. So check this program out. This is a market in Ghana that we recently took from a vegetable market to a bond market. Markets are central in intermediating between demand and supply, between sellers and buyers, between issuers and investors. Let's work together in ramping up capital market development in Africa.